Hello, my name is Iulian Dascalu. I'm a student at the University Stefan Mare Susiva in Romania, and today I'll talk about the development of an intellectual capital valuation model for accounting and financial advisory firms. First of all, the table of contents, which includes introduction, research methodology, discussion and results, and finally conclusion. We start by the aim of this paper, which is to identify the shortcomings that jeopardize the quality of human resources, specifically intellectual capital in accounting and financial consultancy firms, given that there is a total absence of information on this research in Romania so far. So, our first objective to fulfill this aim is to identify first the intellectual capital contribution towards the performance of economic entities in general, to analyze the most common methods of evaluating intellectual capital, and finally, the last objective is to study the management of intangible assets held by accounting and financial consultancy firms. Why is intellectual capital important? Well, in all fields of activity where the formation of advanced professional skills is essential to cope with the multiple crises which we are witnessing today, we find a permanent concern from management to increase the quality of the human resources employed as a unique solution to increase performance and sustainability of their business. In this context, the ascension of digital economy has led to a new heresy with intellectual capital on top, regarding the factors that influence the competitive advantage of firms, especially since in certain fields the possession of these intangible resources is becoming much more important than the possession of material or financial resources. What is the term intellectual capital? Well, in the literature, we find that the intellectual capital incorporates the knowledge, experience, customer relationships, and professional skills that, in a certain situation, can generate a significant added value to the firm. The evaluation and recognition of this resource in the financial reporting of firms is not possible, since there is no normative framework that allows this so far in Romania. After analyzing the literature review, we found out the most common definition of intellectual capital, which is defined as the value of knowledge, skills, and employees training of a company or any information that can give the economic entity a competitive advantage. That is, the expertise of employees, organizational processes, and the sum of knowledge within the organization. The role in creating value for intellectual capital. Many researchers pointed out that there is a significant link between intellectual capital on one side and corporate performance on the other. In the importance of intellectual capital, some researchers argue that the main driver of wealth and growth of modern economies are actually intangible assets. They currently are over 90% of the total assets held by S&P 500 companies, which with a value exceeding $21 trillion. Oh, that's a lot. What are the most common methods of calculating intellectual capital? Well, we see that VAEC, Value Added Intellectual Coefficient, designed by Pulik, CHIV, which is calculating intangible value by Stewart, intangible driver earnings by Lev, and Corrado Hulton Sichel by Corrado. The most common elements which comprise the intellectual capital are the human resource behind it, the structural elements, and the interaction between the human capital on the one side and structural elements on the other. The main problem, and why is this our research significant, is that the simple use of financial statements without values attributed to intangible assets such as employees' knowledge are problematic because they do not reflect the true value of a firm, especially if you're an employer which wants to sell his firms. You don't know the true value. Of course, you know the tangible value and some part of the intangible assets, but you do not have an index value which is attributed to the human capital, and this is where intellectual capital becomes important, because it gives you that value, and then it helps you in taking decisions, you and all other parties involved. In our research, we used the sieve method, which is one of the most common used, by steward. First, we collected the data on 150 firms from a site which is a database for Romanian firms, topfirme.ro. Then we did the database sorting. We sorted the relevant information on 3 levels: on local level in the city Suceava, on regional level in the whole northeastern region of Romania, and on a national level, the whole country. Then we calculated the intellectual capital. We used the formula, but we adapted it a bit because we didn't have the original one needed data from listed companies. These are not listed, so we used our own formula, which is earnings minus return on assets, or tax divided by return on equity. Then we did the data processing, and we did our econometric model building. After doing our models, those resulted in 3 econometric equations, which can be seen below. The coefficients of the models, and at all the 3 levels, and the order of the influence of variables used in decreasing order. As you can see, at the local level we have equity with the most being the most influential. Then we have work productivity, which influences in a negative way, turnover in a positive, return on assets positive, tangible fixed assets positive. At the regional level, again, we have on the first place equity, which is positive, turnover again positive. Then we have work productivity, which influences in a negative way, return on assets positive, and tangible fixed assets positive. And at a national level, equity again on the first place is positive, turnover is positive, work productivity is negative, return on assets is negative, tangible fixed assets is negative. So what do those mean? Equity. This independent variable has the strongest influence on intellectual capital. The reason for that is that the allocation of substantial funds from the owners will translate, of course, into greater attention to the selection of business staff, thus contributing positively to an increase in intellectual capital. Turnover. This is another variable which influences intellectual capital. In essence, an increase in turnover implies an extra effort on the part of employees, which can only be achieved if the company has the intellectual capital to support that effort. Work productivity. Although it seems counterintuitive, an increase in labor productivity implies, first, the automation of the operating activity, or 2, the more tasks being placed on employees, whereby 1, the firm will not need highly skilled staff to perform the task because of automation, or 2, employees are overworked, resulting, of course, in a decrease in intellectual capital. Tangible fixed assets. Their growth has a positive influence on intellectual capital only on the local and regional models, and a negative influence on the national models. Firms at national level have resources and easier access to new technologies, thus their investments contribute to intellectual capital, and they don't rely that much on tangible fixed assets like the firms at local and regional level, which explains the negative link between our variables. And here we can see the results side by side, the net profit for year 2020 and the intellectual capital. We chose year 2020 because we need 3 years prior to calculate the intellectual capital. As we can see, many firms that are originally in the top 10 of net profit can be found in the top 10 list of intellectual capital, which again shows that there's a big link, correlation at least, between the profit of a firm and intellectual capital on the other side. So what are our main results from the research? First of all, we developed an intellectual capital assessment model for accounting and financial consulting firms in Romania, which can be easily adapted to other areas of activity. Our model presents a picture closer to the real value of the entities, as well as factors with a significant influence on intellectual capital. It also provides stakeholders with a simple way of calculating intellectual capital at any time, as well with the possibility of making predictions using the econometric model. Also, this research can be done by using other methods and then compared to ours, see if there are any significant difference. And of course, it can also be done in other areas or fields of activity. Thank you very much and have a nice